Hello everyone, this is Sonali Mangal and welcome to another episode of Learn, Educate, Discover. On this podcast, we invite people from different professions on each of our episodes and we ask them a range of questions to try and understand what their job is all about. The goal of this podcast is to try and educate our listeners about as many different kind of jobs as we can so that someone listening to the show can decide, does a certain job sound interesting to them? And if yes, how do they go about exploring it further? On today's show, we finally are going to be talking about a career in finance. This is something that has been requested quite a few times, so I'm really happy that we are going to be covering something in finance. And on today's episode, we'll be talking about investment banking. So an investment bank is nothing but a financial institution that helps other entities such as corporations and governments and even individuals to raise financial capital. So as an example, let's say there's a company that is looking to raise funds from the public and they decide to go in for an IPO or an initial public offering. Then in such a scenario, they might decide to hire an investment bank to help them manage this process and figure out various things, including at what price per share should they IPO, so that they are able to maximize the amount of money that they're able to raise from this IPO. So that's an example of what an investment bank does. And of course, they do a number of other things such as mergers and acquisitions, helping companies raise debt, and a number of other things. So that's sort of a very rough introduction to investment banking. And to really help us understand this area in detail and in layman's language, our guest on today's show is Arzan Raimalwala, and he is a part of the technology investment banking team at Deutsche Bank, and he's based here in San Francisco. Arzan has been working in this space for more than 2 years now. He started out in the financial institutions group at Deutsche Bank. He was based in New York. And then about a year ago, he switched over to technology. In terms of his background, Arzan has a Bachelor of Science in Accounting and Computer Information Systems from Indiana University. And then he also has an MBA with a concentration in finance from the Wharton School, University of Pennsylvania. Arzan worked as a consultant with Ernst & Young for about 5 years before his MBA, and then after his MBA, he switched over to investment banking. Arzan comes with a lot of great experience in this space, and as you'll see in the discussion, he's going to be sharing a lot of helpful details to really help us understand what working as an investment banker is all about. So I really hope you enjoy today's discussion, and without further ado, let's welcome Arzan to the show. Hey Arzan, how are you? Thank you for joining us.
Hey Sonali, I'm doing great. Thanks a lot for having me.
Yeah, absolutely, man. There's been a lot of requests for careers in finance, so I'm looking forward to this one. Yeah.
I'm surprised you still have so much interest in finance, but that's great to hear.
Yeah. So we'll talk about that. And I do have a confession to make, which is that despite having an MBA, and that too from a school which is known for finance, I have zero idea about finance. I'm not even kidding over here. So if I ask you silly questions, I apologize in advance.
No worries at all.
So I wanted to start out with a little bit of a rapid fire before we get into the discussion. So are you ready?
Sure. Yeah, go ahead.
So in the last year or so, what is the earliest time that you got into office?
The earliest time was probably about 45 minutes after I left, which would be around 7:30, 8 o'clock.
So you left at 7:15 a.m. from office, and then you came.
Yep.
And then you came back.
Yeah, I think that was probably the worst night I had, where I managed to go home only for 45 minutes, basically taking half an hour nap, where I set 3 alarms at 10-minute intervals to make sure that I don't fall into deep sleep, and then take a quick shower and come back in for a meeting
Man. Oh, yeah, okay.
that I was preparing for all night.
That's pretty crazy. Yeah, so we should probably talk more about that. Like, why would you stay in office till 7:15?
Yeah.
And so, I guess, so my next question was, what is the minimum amount of sleep you've had in a night? I'm guessing that was the night.
There were definitely a few all-nighters, especially my first year. So there's definitely been nights where I've gone without any real tangible sleep apart from, quick naps.
I see. And generally, what is the average amount of sleep you can get in a day?
The average fluctuates. I think the one thing you will realize really quickly in investment banking, there's no such thing as average. It's a very lopsided lifestyle where things can be really crushing at one stage and then really quiet a little bit later. So things fluctuate a lot. But, if you try to make a career out of investment banking, then eventually you try to gravitate towards having a more balanced lifestyle and trying to get those average hours, 6-8 hours of sleep that any normal human being needs.
Yeah, it's just hard to sustain otherwise,
Yeah.
right? Yeah.
Although I do have seniors who somehow manage to survive on 4 or 5 hours on a consistent basis.
I see. And then the big question, which is that what is the sort of typical range of bonus that you can expect as an associate in investment banking?
Yeah, so the range of bonuses fluctuate a lot as well. They've improved a lot recently, still nowhere near what they were pre-crisis, pre-2008, but much better than they were in the few years after the crisis. But typically, you can expect something in the range of 70 to 130% of your salary, depending on what kind of bank you're working at, what group you're in, and how well it's performing and how your own performance was. So it can be quite a wide range. If it's anything under 60-70% of your full year salary, then either the firm is going through a really bad stage or basically hinting at you that there's no future there.
Right. So if you were to convert these percentages into dollar value.
Yeah. So the way it usually works is that a first year associate comes in at about $125,000, and so your bonus would be about anywhere between 80,000 to 150,000.
Got it.
And then it kind of increases from there about 20% per year for your 3 years as an associate.
I see. Okay. Now, this is interesting. And the reason I ask these questions is because, based, of course, on what I've heard from others in this industry, but investment banking is clearly, if you look at the working hours, it might seem very crazy to a lot of people. But then it is also a place where you can learn a lot. You work really hard, and the financial rewards are also fairly good compared to other industries. Yeah,
exactly. Yeah, so it's a very attractive option for people coming right out of school, whether it's out of undergrad or master's level business school. Because, like you said, you learn a lot, you make some really quick money, and then you reach a stage where you can evaluate whether this is something you want to keep doing for the long term or explore other exit options that you can go on to do other things.
Yeah. All right. So before we talk more about investment banking, why don't you, just tell us a little bit about yourself and your journey so far?
Sure. Yeah. I think you covered it pretty well. So I grew up in the Middle East in Bahrain. I'm originally from India. Came to the US to study for undergrad and decided to stay on here. After that, I joined Ernst & Young in Chicago. I did that for 3 years and then moved to New Zealand for a year just because I wanted to try something different and be in a different geography. And it was really when I was at EY where I was working really long hours and not making as much money as I knew people in finance make, which is what really kind of drew me towards considering an alternative career and decided to go back to business school. And Wharton being a great finance school, decided to go there. And so, I was really excited to come to Wharton, had a great 2 years, best decision I ever made. And yeah, since then, I've made that switch into finance and been working at Deutsche Bank for the last 2.5 years. Moved over to the Bay Area from New York last year. I thought a lot about between New York and San Francisco right out of school and felt that New York is, the great finance city and definitely wanted to, have that experience of working in New York. And so did that for a couple of years, but eventually came out here to the Bay Area just because I've always been passionate about technology and focused in that space. And so felt this was the best place to be for that.
Yeah, absolutely. And in fact, I did want to touch upon, and we'll do that, which is the, what is the difference that you've seen having worked both in the financial institution side and now the technology side in investment banking. But before we do that, why don't you first, give us an introduction to what is investment banking?
Sure. Even though you said you don't really know much about finance, you explained it really well. It's basically providing companies, both big and small, American and global companies, with financial and strategic advice on corporate finance, bridging that with their overall company strategy. And so when you think about corporate finance, strategic advice, the main areas would be, how to be efficient with the capital and how to figure out, where to allocate your capital, whether it's raising more capital through either equity or debt, or whether it's spending that capital on acquisitions or on other things like share buybacks or increasing dividends. So it's usually a combination of providing holistic advice on how to manage a company's capital and at the same time hand-holding them or walking them through transactions when they have decided on what to do. And then, of course, as a full-service investment bank, the Deutsche Bank is, or any bulge bracket would be, we also have our own balance sheet and lend to companies. And so we do the credit underwriting process for that and then help them with any leverage that they would need in terms of acquisitions or other requirements.
Mm-hmm. Yeah, so so you come from a consulting background yourself, right? So when you describe investment banking as very similar to financial advisory,
right?
Is it just very sophisticated financial consulting?
You can say that it's kind of a mix of financial consulting and providing credit to companies. For example, we would have a client call us and be like, we have this situation, we have this much debt, what kind of a target we're looking for in terms of if you potentially buy something, what should we do? How would shareholders react? Is this a good time, for us to buy back our debt? Can you give us your thoughts? And so then, we'd put together materials to kind of give our thoughts on answering all those questions. And, that would be the advisory aspect, where, for example, we may say that, these are the benefits of raising debt to finance a transaction. These are the benefits of raising equity. These are how shareholders might react if you announce a transaction. These are the reasons why you should consider, these 2-3 alternatives in terms of buying something or partnering with someone and things like that. And then finally, if they do decide to go ahead with something, then, we'd help them structure the transaction, finance the transaction, do the bidding, go through the process, the due diligence, and all that kind of stuff.
I see. So what you're saying is that there's the advisory portion where you will say that, okay, what are the pros and cons of maybe raising capital from the market, et cetera, et cetera. But then if the client decides to go ahead with it, then you're also structuring the transaction for them, which you might not find in a consulting firm. Yeah. Okay.
Yeah, exactly. And they kind of go, hand in hand. For example, if you're doing an IPO, one of the most important decisions you make in an IPO is when you actually go to market to sell the shares and get investor interest and, go public with the filing. And so, that takes a lot of experience and skill in terms of figuring out when is the best time to go to market, what are the conditions, how are investors going to react to this particular issue, and kind of, walking through the client with that. Because many times you have clients that, really want to raise the money as soon as they can and price the highest level they want. But sometimes, you can't have the best of both worlds, getting the price you want and at the time you want it. And so, it takes a lot of experience and understanding of the markets and, having a year with investors and kind of passing on that kind of information to clients.
Yeah, that makes sense. And you mentioned that Deutsche Bank is a bulge bracket bank. So what's a bulge bracket bank?
So for anyone, who starts looking into potential credit investment banking, that's one of the first nuances that they'll come across is, this kind of delineation between bulge brackets and boutiques. And bulge brackets are basically, the more bigger, well-known family names like in the US, Goldman Sachs, Bank of America, Merrill Lynch, Citibank, Morgan Stanley, the bigger banks, that have larger classes of analysts and associates and provide their own balance sheet in terms of lending to companies. So not only do they provide advice, but also the financing when a company does do a transaction. And then they also do equity capital market stuff like IPOs and follow-ons and all that kind of stuff. And usually this requires a company not only to have an investment banking corporate finance unit, but also a sales and trading unit, where they're actually dealing with equities and being able to sell different financial instruments, whether it's equity or debt. Boutique advisory, on the other hand, something like a Volus or an Evercore, is something that, works strictly on advice itself. And they'll help clients, the advisory part that I explained, as well as going through a transaction. So they're more M&A focused, but they won't actually provide the financing. And they definitely won't do any capital market stuff like IPOs.
So when you say they don't provide financing, you mean like you're able to actually give someone a loan?
Exactly, yeah.
Okay.
So, they would think of it like, for example, if you're buying a house, if you were buying a house today on a mortgage, you'd have to go to a realtor to help you find the house and actually buy the house. And at the same time, you'd go to a mortgage lender to actually lend you the money, right?
Right.
And so think of a bulge bracket as someone who's both the realtor and the bank providing the mortgage. They're both advising you on which house to buy, helping you go through the process to buy the house, and at the same time providing you the money. But a boutique would be, just the realtor. They wouldn't be doing the mortgage piece. They tell you, go to Charles Schwab, go to Wells Fargo to get your mortgage, but they help you actually buy the house and figure out which house to buy.
Yeah, no, that's an amazing analogy and that really simplifies things.
Yeah.
So I think what will also be really helpful is that if you can give, in very simple terms, an overview of the finance industry and, where investment bank comes in. or investment banking comes in. Yeah.
Sure. Yeah, so before you even get into bulge bracket and boutique, the bigger distinction in overall finance that anyone who's interested in this space would come across is the distinction between buy side and sell side. Sell side is basically where investment banking sits, and it's known as sell side because you're basically helping companies, with either selling shares or representing companies on the private side. The buy side is known simply because it represents buyers. So that would be private equity firms, pension funds, hedge funds, any kind of institutional buyers where companies are actually buying firms directly and holding direct stakes in the companies that they acquire. And so usually, that's just the broader distinction within the sell side. Then you have the investment banks, and within that, you obviously have different functions. I sit within the corporate finance function, and then you would have the sales and trading function, where you could be any kind of a role from dozens of different things. It could be a derivatives trader. Back in 2008, you could have been structuring mortgage securities, which obviously still happens. So, all kinds of different financial processing.
Yeah. No, absolutely. No, this is helpful. So basically, in very simple terms, sell side is basically when you're trying to sell financial assets, and buy side is when you're buying financial assets.
Right.
And because investment banking is on the sell side, not only are you helping them sell financial assets, but you're also advising them around the whole thing.
Yeah,
the whole process,
exactly.
Right. So within investment banking, as you said, there's corporate finance and then there's sales and trading. It will be helpful if you can just give us a few sort of lines on what is corporate finance within investment banking and what is sales and trading within investment banking.
Yeah, so corporate finance is basically the stuff I do, and that's traditionally known as investment banking, and that's what I explained in terms of advisory and capital market stuff. It's basically advising companies on M&A, helping them go through the process, and then doing IPOs and debt-related transactions, all kinds of capital markets transactions. Sales and trading, it's a very evolving place at this point in time, especially because of Dodd-Frank and all the changes that have come from that. And that's the area that has been largely the trouble area for banks in terms of all the litigation and fees and fines and the loss making that's hit their financial statements. Traditionally, sales and trading was divided between what was known as proprietary trading, where banks traded on their own books. And so it's like you buying stocks and bonds in the market. Banks would do the same thing for their own balance sheet. They'd have their own portfolio of stocks and bonds, and then they would trade on behalf of other clients. And so that would be basically trading for other clients. And that also involves a lot of derivatives trading. And so helping companies with hedging, whether it's interest rate swaps or currency swaps. These are kind of technical terms, but they're basically, just protecting yourself from fluctuations in interest rates or currencies. Anything that, has a potential fluctuation. For example, if you're trading with a country in Europe and you're worried about the fluctuation in the exchange rate between euro and US dollars, and you want to hedge that and have a fixed rate, then you'd go to a bank, and the currency rate derivative desk would help you with that. And so the proprietary trading is the piece that has been slowly going away, in that the Volcker rule from Dodd-Frank has kind of made very difficult and onerous for banks to do. But the other part, which is doing trading on behalf of other clients, is still there, and will probably remain.
Okay. Yeah, no, that makes sense. Okay. So sales and trading is basically, for the most part, it's trading on behalf of your clients.
Exactly.
In a whole bunch of different assets. Okay, got it. So then within your sort of traditional investment banking, are there specializations that you can have, various specializations?
Yeah, so within investment banking, you usually get slotted into three kind of roles. One would be generalist, and that's usually seen more often in boutiques, where you're kind of at a small place, and so you focus on all industries and are not in a particular coverage group. And the second thing would be being in a coverage group, which is more likely to happen at a bigger bulge bracket where you focus on a particular industry. So, for example, I'm in the technology coverage group, and so I cover clients in the tech industry. And the third would be being in the product group, which is also usually only in bulge brackets. And that's basically you're not directly working in a particular industry, but you're focusing on a particular product. So you might be in an M&A group and only do M&A for companies in any industry. Or you might be in equity capital markets and only do equity stuff like IPOs and follow-ons and things like that.
I see. Okay. I think at this point it might be really helpful to talk about sort of, what is sort of the typical project or a typical problem that you might work on, depending on whether you're working as a generalist or if you're focused on an industry or if you're focused on a product group. So let's take the example of a company that is looking to IPO. So in that case, so if they come to an investment banking firm, like they come to Deutsche Bank, because it's an IPO, they would be working with the product group then, which is equity capital markets group.
Yes, I see your question. So basically, they would work always with the coverage banker initially. The coverage banker is the one who holds client relationships. You may have heard the word pitching, which is where you actually go and have initial meetings with companies and try to win work from them. And that's always done by the coverage team. And so it's a coverage banker that would, build a relationship and bring in that kind of business. Product partners are brought in depending on, what the conversation or the meeting is going to be about. And so, for example, I could have a client where since I'm in coverage, my MD is covering, let's say, a particular client. If that client is considering going public, doing an IPO, then my MD will bring in the ECM MD.
I see.
By MD, I mean managing director, obviously. And if that company is looking to acquire another company, then my MD will bring in the M&A MD. And then, for example, if they're looking to raise debt, then, we'd bring in the leverage finance MD.
Right.
So depending on what they're trying to do, different product partners would become involved. But there's always the coverage banker that holds the ultimate relationship, because the same client will use multiple products and different products over a period of time.
Right. Okay, no, this is extremely helpful. So basically there's the coverage banker whose job is more to get the business through existing relationships or going out and building relationships. And then depending on whatever sort of the quote unquote project or problem is, they bring in the product people who have the expertise in various product areas.
Yeah.
Got it.
And so, for example, at my level, if we're working with a client to buy another company through debt, then, my team will be working on both the part that is acquiring the company and the part that is getting through the credit process to give them a loan. And so for the credit process, I would work with the LEFIN team. And then for the M&A process, I'd work with the M&A team. And so sitting in coverage, one of the benefits is that you get to see everything and be involved in all aspects. And that's kind of why when I came into investment banking, I came into coverage.
Yeah, no, this sounds very interesting. So then when you join, so post MBA, I'm guessing you join as an associate, right?
Yep.
So do you start to sort of choose whether coverage or a product area or whatever from the get-go, or how does that work?
Yeah, it depends. So it's a little bit different at the analyst level and at the associate level, mostly because the analyst level tends to be more structured, and the associate level recruiting is more through networking and meeting people. And so you kind of get to kind of learn more about what happens and position yourself for a particular group. At the analyst level, it's usually, as far as I know, the recruiting happens at the firm level. So you basically get an offer for the firm, and they usually have a day where everyone kind of, all the new hires pick what groups they want to be in, and then the groups pick what analysts they want, and then they get matched. And then that sometimes happens at the associate level, but also sometimes associates are just directly hired into a particular group that they've been interviewing for.
Okay, got it. And the coverage group, which is the group that you're in, are the relationships maintained with the client across all levels, or, is it more depending on your seniority?
Yeah, it is usually at several levels. It can also depend from client to client. Generally, the bigger the client, the more senior the relationship is going to be. And so, for example, I worked on an M&A transaction for the best part of a year, actually probably for more than a year, where ultimately, working so closely with the client, I built, direct one-on-one relationships with the junior person at the finance team over there, and pretty good working relationship with them. And then also a decent relationship, not a working one, but, more just general relationship with the senior person. And so there's always relationships at every level. And the more demanding the project is, the more exposure the junior people will have.
Yeah. I'm very curious about how business is generated, right? So, like, for example, what I've seen in consulting is that a lot of business just comes through existing relationships. Mm-hmm. But let's say, for example, like you took the example of an M&A project. So does the company already have a company in mind that they're looking to acquire, or you help them figure out, okay, these are the companies that might be good for you to consider?
Yeah, it really depends. So I would say there's basically three categories that you can put it into. There's existing relationships where a company may have a banker that they depend on, and they use that banker for the most part. The second would be where the company decides to do what's known as a bake-off, where they invite six, seven, eight, nine, however many banks they want to come and present, and then they pick, one, two, three, whichever ones they want. And then the third is what I call ambulance chasing. It's basically you just go after companies, cold call them, and try to win business. And so I see all three happening.
Okay.
I've been in cases where we've won work because of existing relationships, and the client trusts us.
Yeah.
And then I've seen cases where I've worked in an IPO where we had no pre-existing relationship at all, where the company never used bankers before, and then when they decided to go public, they had a bake-off for the IPO, and so we basically presented and won a role on that IPO. And then the third is what is commonly known as pitching, where you just go to companies and try to get in front of the decision makers and try to win business from them.
Yeah, yeah. And generally these relationships, the relationships more with companies, big companies, let's say like Amazon or Microsoft or Google, who will typically be acquiring other companies? Or do you also have relationships with these smaller firms, the so-called unicorns? Well, not necessarily unicorns, but who might be good candidates for getting acquired?
Yeah, totally, right? So
Yeah.
it's basically, you have to basically try to pick them early so that you get in there early, and then when they get bigger, they remember that you were there for them when they were small.
Yeah.
And kind of that's how the trust builds. Usually so tech is kind of a very, very different space from everything else. It's just a whole different world out here. And the bigger tech companies like Google, Amazon, Apple, they just have so much cash and such big teams that they're just capable of doing a lot of stuff on their own. They don't even need external advisors many times. Part of the fact that they have so much cash means that they rarely ever raise debt. You never,
That's
Apple
right.
now does, which is one of the rare ones, but you rarely ever hear of Google going into the debt markets to raise debt. And with the smaller companies, so basically with the smaller companies, usually the first stage that they would use investment banks is to get a line of credit. It's basically like you getting your first credit card, or a smaller company getting their first line of credit where they can borrow money against that credit line is the first step. And so being able to get onto that credit line puts you in position for bigger things later on, whether they decide to sell themselves or go public. And so you basically want to try and get in and have that relationship as early on as possible.
No, absolutely. So how do you find these companies early on?
So it's obviously a mix of things. It's basically, you have to stay on top of the industry and know, what other companies out there, and kind of have dialogues with the people at those companies.
So when you say early stage, in your parlance, what is early stage?
So usually they are, revenue generating. Usually in most industries, they would also be profitable, but in tech, that's not necessary. So usually they are at least generating revenue and growing, and they have established businesses. It also fluctuates from specific industries within tech. For example, semiconductor companies have a really, really long product cycle. So it may take up to a decade for a new semiconductor company to actually be on its own 2 feet and have a product that's out in the market and selling. And so an early stage software or internet company might be something that's just 2-3 years old, growing insanely, like an Uber or a Facebook. But an early stage semiconductor company might be something that's almost a decade old. So it depends a lot on what particular space within technology you're talking.
Right. And so this is where someone like you who's focused on the technology industry has to be aware of these nuances across these different verticals within tech.
Exactly. And a lot of time tech groups are structured that way, where you focus on particular verticals. So analysts are usually generalist, and sometimes junior associates can be generalists as well. But usually at higher levels, bankers are focused on particular sectors. So, you'd be you'd be a semiconductor banker, or you'd be internet media banker, you'd be a software banker, you'd be communications banker. So as they go higher up, generally the investment bankers tend to be focused on a niche sector within technology,
Hmm.
especially at the bulge brackets. And that way, their experience and focus is all on that one sector.
Yeah, that makes sense. Okay. Yeah, so I think it'll be really helpful if you can take an example of any project that maybe you have worked on, without disclosing anything confidential,
Mm-hmm.
and talk about what are the kind of things that you might work on during a project.
Sure. So let me think. What's a good project? Yeah, most of the things I would do would be the same on any project. So I can just speak generically, but basically, if I were to start right from the beginning, assuming that we're still in pitch mode, you'd basically the initial thing would be putting together a book for initial meeting or a bake off, which can be a lot more intense. If I give you the example of a bake off where you're presenting to a client to win a business, it's usually 1 or 2 weeks of really grueling work where you're putting together materials. And for example, I've had one bake off where I had 3 all-nighters in a week. 3 days out of that week, I basically didn't go home.
Oh my
And
God. Do you have some place to sleep in the office?
yeah, so usually as the associate, sometimes I'm just dozing off on a chair behind my analyst while he's still cranking away. Um, but sometimes I think the analysts, depending on the situation and the layout of their office, can sometimes create makeshift beds or
Oh man, okay.
I've heard of analysts having sleeping bags in the office, and
Oh, okay.
um,
Sleeping bags in the
and
office.
that's probably one of the reasons why a lot of the junior bankers also try to live really close to
Yeah.
their office, so that you can quickly escape for a quick nap and come back.
Yeah.
So that's not unheard of either.
Makes sense.
Um,
All right. So you had your 3 all-nighters in 1 week itself. Okay.
yeah, just to give you an example of how intense the bake off can be, because it's a real cram job. It's basically like studying for a finals the last week of the semester without having gone to class or done anything.
Yeah.
Basically, 1 week to like give those finals and pass the class.
Yeah.
And so I'm sure anyone would have gone through that experience in college, and you kind of continue having that experience
Yeah.
still
Yeah.
in banking. Yeah, and so after that, if you are lucky and you won, then that's where you start actually working on the project. If not, then you just go on to the next one. But assuming that you do win, then you usually have an initial organization meeting. And usually if it's an M&A process, it's only one bank. So you would just, basically it'd be a lot more informal. You'd be meeting with the client counterparts and starting off the work. If it's an IPO, you usually would have multiple banks. And so you'd have an org meeting where all the banks and lawyers and the client get together. And that's where you kind of hash out the timeline for the project and the responsibilities and the next steps. In an IPO, there's a lot of regulatory work that goes into it. And so basically you kind of hash out the timeline and what the key milestones are and when they need to be achieved by. And those will be things like filing with the SEC, having a financial model ready, and then the bankers doing their diligence. Once all that's done, then going out to investors to sell the company. And so as the junior person, you're usually, a lot of the work you're doing is preparing the materials for all these meetings and presentations and the financial model and things like that. If it's an M&A project, if you're representing the seller, then you usually would set up a data room where you upload all the clients' financials and documents so that other potential buyers can, go through those things. If you're on a buyer's side, then you'd be the person who's going into the data room, pulling all the information, building the model, and coming up with the foundation for the valuation. And in an M&A project, there's no limit to what kind of analysis you can do. It all depends on, what your senior banker wants to see, or what the client wants to see, running all kinds of scenarios, assuming you're making all kinds of different assumptions. And so there's a lot of financial modeling involved in that case. And so, that those processes can last anywhere from a couple months to more than 1 year. It kind of, just goes on. And usually you're working on more than one project at the same time. So usually you'd be working on anywhere from 2, 3 to 5, 6, 7 projects. And then you kind of just have to juggle your time between those and prioritize. So things can get intense if you're working on too many things at once.
Yeah, so one single associate or an analyst can work on 2, 3, 4, 5 up till 7 projects at a time?
Oh yeah, totally. And it fluctuates a lot. Usually, so there's the concept of a staffer, and that's basically a mid-level banker a VP or director who's responsible for staffing analysts and associates on different projects, and they are basically responsible for making sure that no one has too many things on their plate at the same time.
I see.
But it can happen where things just kind of blow up, and things that were kind of dormant for a while suddenly come back from nowhere. And to give you an example, in my first summer, I was working on a Europe IPO and a Hong Kong M&A deal, and then I had my US stuff going on over here. And so just the nature of working on cross-border stuff and stuff outside of the US, the time differences, I was basically working nonstop because the time difference made it so that even at night, even if I was sleeping, the work was actually still going on. And I would have calls with Hong Kong at 11 p.m. on, almost not daily basis, but at least 2-3 times a week. And so pretty much my day was never done before midnight, just from that perspective.
Yeah.
And then working with people in Europe, by the time I'm getting up at 7, 8 a.m., they've already gone through half our day. And so by the time I get into the office, I have a whole inbox of emails already waiting for me. And so it can get pretty intense, just by such coincidences and working on international stuff as well.
Yeah. I mean, is this the reason you would say that investment bankers have such crazy hours? Because you're working on so many things at the same time?
Yeah, there's not really one reason. I think one of them is that they're working on too many things. There can also be inefficiencies that kind of create more work than there needs to be sometimes, so that can play into it as well. And I think the main reason is that investment banking is just really competitive, and there's just so many banks vying for the same business that everyone is trying to put their best foot forward. And so it becomes a demanding job just from the fact that you're trying to provide the best possible service and work to the clients.
Yeah,
but
actually,
I mean, it's an industry full of A-type people, so and perfectionists. So yeah, it definitely is pretty demanding.
No, absolutely. And the book that you mentioned that you prepare for the pitch, generally how big is it?
So it can depend. It all depends on the senior banker and how what their practice usually is. But I'll say on average, maybe like 20-30 pages.
I see. Okay. Yeah, and I think that's the other interesting point that you brought up, that a lot of the work that you do is really dependent on the senior banker who's driving it. And so
exactly,
it's not the same thing that you can do over and over again.
Exactly. Yeah. I mean, like if you're in investment banking, you'll see MDs that go into meetings without any books and are very comfortable just talking. And then you'll see others that, rely a lot on actual materials and will, want a lot of stuff on paper.
Yeah.
And so the junior experience can also be very different, not only from bank to bank or team to team, but simply between, working for two different senior bankers.
Oh, yeah, absolutely. Yeah. Yeah, so I think, Arzan, this gives us a really good idea about just sort of life as an investment banker and what it is. Now, I think it'll be interesting if you can just tell us a little bit about, on a day-to-day basis, what are the kind of things that you would be sort of not working on, but the kind of issues or problems that you might run into?
Yeah, I guess I would say the most stressful situations would be when clients have requests that are ASAP requests, and you need to pull stuff on the fly and do some quick back of the envelope math, or in cases where you're working on a very hectic M&A transaction and you're getting close to a bidding date, or you're running really intense models and you're just getting fired with questions left and right. Tell me, run this real quick and tell me what you get. Run this, run this, run that from 5 different people, and you can only one person can be in a file at one time making changes. And you'd have like 2-3 people hovering on top of each other trying to work out stuff quick as possible with senior people or clients on the phone, demanding answers. And so stress levels can get really high at times, and you just have to be capable of handling it and not taking things too personally or too close to your chest. People can get stressed out and take it out on others, and you have to be a certain kind of person to be able to deal with that.
Yeah, no, this is very, very helpful, because I think the day-to-day life is what is ultimately, that's what you have to deal with, right? Like, as opposed to the high-level problem, which might sound very fancy from the outside.
Yeah, exactly. I would say on a general level, on the corporate finance side, day-to-day life is pretty slow, unless you're actively in the middle of a very active deal. But generally, I would come in, catch up on the news, read whatever relevant articles or information out there that is relevant to my space, And then depending on, whether there are any meetings that day, I would attend those. If not, then whatever deliverables we have coming up in the next few days, check in with the analyst where those things are going. I would, help them with anything they're stuck on, help them with doing research, reading financial statements, industry reports, analyst research, and pulling the information we need, checking their work, going through models, making sure that the numbers are right, going through the actual presentation materials to make sure everything is the way it's supposed to be, and things like that. So it's not, super stressful. And then if I'm working on something that's super live, then that's when it can get really stressful, where, you have things going on at a much more fast pace.
Yeah. There is this perception in investment banking as an outsider that face time matters a lot. Is that true? And what are your thoughts on this?
Yeah, that's a good question. I think it's changing a lot. It doesn't matter as much as it used to, especially in the US. And I think the industry has recognized that, they're competing with tech and consulting and other industries that are trying to, chase the same talent. So it's definitely improving a lot. But at the same time, it's also, just the nature of the industry where you can't really avoid it to a whole extent. And partly because the job of a senior banker is really to bring business. And that means spending a lot of time with clients. And so, for example, if I have a meeting next week and we're working on materials for that, my senior banker, he may be traveling for a meeting and not get a chance to look at materials till later in the evening, or not even next week. Let's say there's meeting 2 days from now, and he may not get a chance to look at something till sometime late afternoon. And that means now he's, got his comments to us around 5 o'clock, 6 o'clock, and we need to turn them in the next 24 hours. And so, you end up having a long day just by the nature of the business where, you could have got stuff done much earlier, but, you just didn't have, your senior didn't have a chance to get to it. So that doesn't mean that you can just show up to the office at 5 p.m. You would still have to sit there all day and, kind of do other things or read or do research or whatever. Usually you have other things to work on as well. But, if you don't, then it doesn't mean you can just show up at 5 p.m. So I don't think there's a whole lot of where people are sitting around because they have to show their face, but there is definitely at the same time sitting around where, you're just waiting to hear back from other people because they are busy with other things.
Yeah, absolutely. Okay. And just one more thing on this, which is that, lately investment banking has received a little bit of a bad rap in the media, right? That it is very stressful and all that. So what are your thoughts on that? You're in there, in the thick and thin of things, right? So what are your thoughts on that?
Yeah, it's pretty funny. I never thought Deutsche Bank would become a household name where everyone from my mom knows about it. So it's rarely the kind of news you want to hear. I mean, it is what it is. It's nothing that, you can really do anything about. I think ultimately you realize that you're in this job for particular reasons. That doesn't really have much to do with, what is happening with the industry overall. And industries go through cycles. When I was in undergrad early on, that's when or right before I went to undergrad, that's when the whole Enron scandal broke out and it took down Arthur Andersen, and accounting firms were in a lot of trouble. They eventually came out of it and are doing great now. And so industries go through cycles. Technology had the same thing. They had the dot-com bust, and now it's the hottest thing ever. So these fluctuations happen, and you just have to be aware of that. It doesn't hit us directly as much. My day-to-day job has nothing to do with, a lot of these problems. And so I guess it's a bigger headache for higher up people who are actually running the bank as opposed to someone like me sitting in tech banking.
Yeah. All right. So in your opinion, what do you think are the most interesting aspects of working in investment banking?
I would say the most interesting thing is, first of all, you get to cover a lot of different cool, interesting companies and work with people at these companies. And so you get a lot of exposure. You get exposure to a lot of seniority that you wouldn't, I think, anywhere else. There's very few places that you can, be attending meetings with CEOs and board of directors right out of college or business school. And so you get a really good exposure right off the bat. And then it's a really dynamic job. The stressful part is something that some people can't handle and then other people enjoy. And I would say I'm somewhere in between where, if things are too slow, then I get bored really fast. So I kind of like having, some of that intensity. And then at the same time, it's good balance between doing quantitative financial modeling and strategic advisory work. And so kind of, leveraging a lot of what we learn in business school.
Yeah. And I think you've touched a lot upon stuff that's challenging, which is primarily sort of the sort of last minute stressful situations that might crop up. But is there anything that you just do not like about this space?
Anything that I do not like? Probably have a lot more answers if you asked me 10 years ago, but things have changed a lot and for the better. So there's nothing really that I can think of that I don't like strongly. I guess the one thing is the unpredictability. So the nature of the work and the fact that, we are so dedicated to our clients means that things can come up very randomly and it's hard to plan around it. And so I could have a vacation planned out 3 months from now and something could come up where, I would have to cancel or change my plans and have no control over it. So not only vacations, but even weekends are kind of hard to plan around because you never know when work comes up. It's not the kind of job where, you can switch off and not be troubled by anyone. You kind of always are expected to be accessible and available. And so overall, people are really understanding and try to make sure that everyone has, a good work-life balance. But at the same time, things can come up, and I think not being able to plan is the only thing that is kind of challenging.
Yeah. So are there any common mistakes that you've seen people often make in this role, maybe when they're early on in their careers?
Coming in for the wrong reasons would be the biggest mistake.
So what's the wrong reason?
Yeah, I think it's a very difficult job and it's not for everyone. So I think it's really important. It's one thing hearing about it, but it's really important to visualize yourself doing it. And especially as an analyst straight out of school, your first year can be pretty brutal where you don't have much personal life. And it pays rewards in the long term and you learn a lot, but it's not for everyone. And so you have to really enjoy spending a lot of time in Excel and doing modeling and doing research, reading financial statements. And so a lot of the things you hear about investment banking would be the glamorous things that MDs do, traveling and meeting clients and all that kind of stuff. But at the junior level, especially at the analyst level, it's a lot of hard work. And so you have to come in with the right attitude. I think it's not a hard job. Anyone can learn it and do well. Some take longer than others. But if you don't have a good attitude and if you're not coming in for the right reasons, then you're going to struggle.
Yeah. No, that's actually very good advice. And I'm guessing an internship is the best way to test the waters, right?
Yeah, exactly. That's definitely the best way. Although sometimes internships can be a little misleading because obviously the bank is in sell mode and they want to, get the best candidates and make sure they have a good experience. But you can still observe, how the full-timers and, talk to them and get a feel for it. So yeah, there's no better way, obviously, than interning.
Yeah. And can you briefly touch upon the hierarchy in a typical investment bank?
Yeah, so there's basically analysts that are straight out of undergrad, then there's associates who are the next level, then there are VPs, vice presidents, and then directors, and then finally managing directors, or in the case of private firms, partners. And the managing directors usually, and the directors usually do most of the client-facing work, and VPs and associates also do a lot of client-facing, but also a lot of the actual execution. And then the analysts, I would say, would be about 80% execution.
Right. And generally, if you were to look at from analyst to an MD, how long is that typical in terms of time?
It can be anywhere from 10 to 15 years, usually.
Okay.
So usually the pace to VP or even to director is pretty standard and structured. And then it's really the jump from VP to director and then director to MD that depend on, how well you are doing and how much business you're bringing in.
Right. Okay. All right. Thanks a lot, Arzan. So I just have some last few questions to help people who might be interested in exploring investment banking as a career. Yeah. So in your opinion, what kind of person do you think would really thrive in this industry?
So it attracts a lot of A-type people, but I don't think that's necessary. I would say that you basically, like I said, have to have a really good attitude and you have to enjoy numbers, especially as an analyst. You have to enjoy spending a lot of time in Excel and PowerPoint and being humble and being able to do research. And I think the soft skills and, the networking with clients and stuff, that comes much later. So for people who expect that early on, it wouldn't be the right place to come. For people who are, willing to work hard, it's a great place to go.
I mean, so you said humble. Is that really true? Because I've met so many investment bankers or
Well,
not.
well, when I say humble is because there's a lot of crappy work as well, especially our generation. I think straight out of school, sometimes, people can have lofted expectations in terms of what kind of work they'll do. Investment banking early on. I think most jobs out of business school early on, you're not working at a tech company, you're not writing the next $1 billion software. So I think some people may want to do that and can do that, but investment banking is a more traditional business where being at the bottom of the hierarchy, you're kind of doing the kind of stuff that no one else wants to do, and so you have to be willing to do that. I think, and that's where the humility comes in, because it's more of a traditional industry than the new tech stuff.
Yeah. No, that's a good point. Although, yeah, I've met many investment bankers who I won't really describe as being humble. Yeah.
I guess the humility is lost eventually.
Yeah. And, I think the networking piece is a really good point. And do you think that you have to be more extroverted than introverted?
No, I mean, overall, my overall philosophy in life, I would say, is that you can do well at anything, no matter what, whether you're introverted or extroverted. So that wouldn't be specific to investment banking. I don't think there's any job that you really need to be either one or the other. You do have to be comfortable speaking in front of other people and presenting your ideas. But honestly, I mean, I think you would have to have that skill set for anything coming out of business school. It may take more effort for some than others, but I don't think being an introvert holds you back in any way.
Yeah. And the best investment bankers, what do you see them do differently?
The best investment bankers, I say, are at the junior level. I would say they take the extra effort to anticipate, what their senior is going to look for, what they want, and kind of manage upwards. And whether it's being prepared with stuff before it's even asked for, or doing work diligently and accurately with few mistakes. And at the senior level, the best bankers are basically the ones, that are able to win, the most business from companies. And that really comes down to building good relationships with the decision makers of the companies and being, able to generate business and have a team that's willing to work hard for them.
Absolutely. And so if someone is looking to learn more about this space, or is interviews are coming up, are there any resources that you found helpful for budding investment bankers?
Google, the best resource for any questions you have.
Yeah.
But on a serious note, I would say there are a few websites. There's Wall Street Oasis, and then I think there's Mergers and Acquisitions. I think those two are pretty popular websites for people looking to come in. If you're in business school, then the Career Center is obviously the best resource. Usually investment banking recruiting involves target schools where, they would come on campus and recruit. And so that makes life really easy. If your school's not a target school, then it really comes down to cold calling and networking. And it's kind of playing the MD role really early on, where it's kind of just trying to get in touch with alumni who are in the industry and trying to set up time to talk to them and sending your resume and going from there.
Yeah, so actually that's a great point. And if you are in a school where a bank is not coming in and you're cold calling, how can you stand out? Because I'm sure everyone is receiving a bunch of requests from many students.
Yeah, I would say the first thing is don't make mistakes. You'll be surprised about how many careless mistakes you see, even in emails and things like that.
Like what kind of mistakes?
Just typos and getting the time wrong for what time the call is supposed to be, or things like that. And I mean, it's understandable that a lot of them are still, barely 20 years old. But I think if you want to stand out, you want to show professionalism right off the bat, and that helps a lot. And then also showing real interest and being persistent. I think people in investment banking and pretty much in any industry are obviously pretty busy people. And so it's easy to get dejected when you don't get responses, but usually it's not because the person is ignoring you. It's more likely because they're just really busy. And so I think being persistent stands out because that shows that you're really interested.
Absolutely. I don't think we need to get into business school recruiting because that is fairly structured. So if someone is in business school, they can figure that out. But do investment banks recruit from outside schools also?
Yeah, they do. They do lateral recruiting. It's generally from other banks, and it's pretty tough to change careers without going to school. But usually it's possible if you're just a year out of school. I've seen it happen where you would basically come in as a first-year analyst that would, be very ad hoc and dependent on kind of, just getting in touch with the bank's HR or networking with an alumni and dropping in your resume and trying to go from there. But it does happen occasionally. It's not that common, but it's not uncommon as well.
Okay. But then you will start at the bottom if you're switching
Yeah, you will.
industries.
Yeah.
Okay.
So analyst programs usually are 2 to 3 years. And so, if you've come out of school and done something else that's, sort of related, not very related, it's not a big deal to restart from the bottom, because nonetheless, in 2 years or 3 years, you'll be an associate anyway. And given that investment banking is so structured compared to maybe some other, if you were to just go and work at, for example, GE corporate finance, you're not guaranteed like 3 promotions in the next 5 years like you are in investment banking.
Yeah.
So even if you lose a year, it's not really, or in the long run, going to hurt you much.
Yeah. No, that makes sense. All right. Thanks a lot, Arzan. This was really, really helpful. Is there any other sort of parting advice that you'd like to share with the listeners?
No, not really. I think I've given all the advice I probably can. But, I think overall, I would say, always, if you're recruiting in banking or anything else, whoever you meet, ask a lot of questions, try to, get a feel for the work environment. I've always said this in investment banking, the people you work with are more your family than your real family, because you see them way more than you probably see anyone else. It's really important to make sure that, it's the right decision and you're going to the right place. So always try to meet as many people as you can if you're recruiting and get to know them before you go there.
Absolutely. All right. Thanks a lot. And
thank you.
Thank you for the time. Yeah. Take care. Bye-bye.
Yeah, bye.
So that was Arzan on investment banking. I really hope that you enjoyed today's discussion and found it helpful. I, for one, definitely feel a little bit more intelligent today because I think I finally understand what investment bankers do. I never did. Anyway, I really hope you enjoyed today's discussion. And of course, if you have any questions at all for Arzan or for me, you can email us at learneducatediscover@gmail.com. And you can also tweet at us. Our Twitter handle is @led_curator. You can also find us on Facebook. Our Facebook page is at facebook.com/learneducatediscover. And in fact, if you like the page, you'll start getting the updates on all the great content that we are putting together for you guys. If you enjoy what we're doing, you can simply subscribe to the show. You can find us on iTunes or Soundcloud or Stitcher. You can search for Learn, Educate, Discover, and then you'll find us, and then you can hit subscribe. And of course, while you're at it, leave us a review. It honestly takes only a minute and it means a lot. So please do leave a review. And yes, that's it for today. Thank you so much for listening. And until the next one, take care and be well.